Welcome to Mark Gibson's Human Rights Channel, accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
So money markets. So money markets involve debt instruments with original maturities of 1 year or less. Kung naalala niyo class, when we discuss financial market, under financial market, we have two groups, no? Money market and the other one is capital market. So money market, um, basically these are short term. So kung naalala niyo yung sa financial statement, this will be included as part of your current assets, no? So under investment. Okay? So money market instruments have active secondary markets to provide liquidity. And unlike the capital market, the money market does not have a specific location to operate. They are executed through telephones, wire transfers, and computer trading. Thus, most of the money markets are said to be an over-the-counter markets. So money markets class, at the standpoint of the investor, we're actually just holding this in a short period of time. So that's the reason why we classify it as current asset. The reason being is the intention is to hold it within 1 year or less. So just the same with capital market, we also have secondary markets within the money market. So, di ba, nalala nyo, in capital market, after the initial public offering, it goes through the secondary market now where we can trade. So it's also similar with money market, just that there's no specific location, meaning it can be done informally. So yun nga, sabi, it can be through telephones, wire transfer, and computer trading. Isa pa kasi, pag sinabi kasi nating money market, usually these are instruments na bearer, no? So meaning, kung sino yung may hawak, siya yung owner. So that's why it can be negotiated and it can be transferred anytime, no? So, okay. So what are the characteristics of money markets? So number one, they are sold in large denominations. They have a maturity period of less than a year. Napag-usapan natin. Have low default risk. So default, no? So yan yung non-payment. And number four, it arises because the need for cash by the different units do not coincide with their cash receipts. So paano yan? Usually, we enter into money market because we have a requirement to get cash. But then, it's short term kasi nga, meron naman tayong in-expect na money. Problem lang is, it doesn't coincide with the cash receipts. So, paano yun? For example, siguro a good example yung bank guarantees, no? So usually we use bank guarantees between transactions abroad, no? So dahil nga meron ka ng bank guarantee or yung certificate, it's actually guaranteed by the bank, no? So therefore, you can use that to transact with entities abroad. But like I said, it's already guaranteed by the bank. Guaranteed in such a way that you all already have a relationship with that bank. So money market yields. Money market securities use special rate quoting conventions. So meaning, ito yung mga in siguro para mas madaling intindihan, ito yung mga rates involved in money market securities. So number one, we have discount yields. So interest rate is quoted on an annual basis, assuming a 360-day year as a percent of redemption price or face value. And secondly, we have single payment yields. So the interest rate is quoted on an annual basis, assuming a 360-day year as a percent of purchase price. Both may be converted to a bond equivalent yield for comparison with bonds. Sige, ito class in financial management problems, if it's mentioned as 360, susundin natin yun. No? But if the problem tells otherwise, say the problem clearly states that we should use 365 days. So meaning it's calendar, it's following a calendar year. No? So we have to be specific now, no, on the use of 365 days. No? So if the problem is silent, we use 360 day. Now, pansinin nyo, it also mentioned here that these rates can be converted to a band equivalent yield. So meaning band rate or yung tinatawag nating nominal rate. Bakit importante na i-convert tong rates na to, discount yield and single payment yields, to band equivalent yield? Well, the reason being is that for bonds, remember bonds, these are your certificate of indebtedness. No? We hold this long term. So the reason why we need to, we're able to convert discount yields and single payment yields to bond equivalent yield is to compare it to compare it as if we're holding it long term, no? Okay, so basically, we're just checking. Right now, we're talking about money market. We're talking about short term. But what if we need to compare it versus holding it in the long run? So that would be the bond equivalent yield. So yun lang naman yun. Okay. So discount yields. Sabi natin kanina, discount yields, these are interest rate quoted on an annual basis assuming 360 day as a percent of redemption price or the face value. Kailan applicable ang discount yields? So discount yields are applicable to treasury bills and commercial paper. So commercial paper rates are quoted as discount yields. No? So ito na nga yan. Now, how to compute for the discount yields? So like I said in our previous sessions, financial management is more like dealing with mathematical problems rather than accounting. You know? So if you remember, I'm sure you've taken your financial management course already. You know? So you have your working capital management, your inventory management, so you dealt with economic order quantity. So this time, it's kind of the same because in accounting, remember, these rates are already provided to you. Sabihin sa'yo, rate is 10%. No? But in financial management problems, we are being asked to compute for the rates. So that's why this is more of mathematical problem than accounting. But just the same, it's also important to know how do we come up, how do we calculate those interests. No? So in this case, discount yield. So to better illustrate this, let's apply in a problem, but later on. Okay, so also earlier we've talked about how to convert discount yields, no, to bond equivalent yield. So this is your formula. So discount yield, so I to indicate interest, and then D to indicate discount yield. So PF, remember F is the face value, and then P0, so that's the purchase price of the security, over PF, or the face value of the security, multiplied by 360 over N. And yung N dito, this will be the number of days until maturity. So tandaan na, number of days until maturity. So for example, the issue date is January 1. Sabihin natin na it will mature in 90 days. So you just have to count between January 1 up to 90 days. No, it will be the issuance date na. Yun yung kalaging check natin to determine yung number of days until maturity. Okay? Mamaya meron tayong sample problem to illustrate that. Now, how are we going to convert discount yield to bond equivalent yield? This is your formula. So again, I to indicate interest, B, basically this is your bond equivalent, is equal to interest and then discount yield, remember, multiplied by your face value over the purchase price multiplied by 365 over 360. Or this is another way to calculate it. Either formula will give you the same result. Okay. So when is single payment yields applicable? So kanina napag-usapan natin, no? Yung discount yields is applicable to treasury bills and commercial papers. Now, single payment yields is applicable to negotiable certificate of deposits and federal funds. For a reason that this negotiable certificate of deposits are payable only at maturity. So meaning, single payment lang. No? Kasi di ba, meron tayong ibang mga marketable securities that can be paid in interval. No? So this type, like negotiable CDs or negotiable certificate of deposits, is only payable one time during maturity. Okay. So now, what's the formula to calculate for the interest? So that's interest, and then SP, just to denote single payment, is equals to your price at face value less the purchase price over the purchase price multiplied by 360 over N. Again, yung N is the number of days to maturity. Now, how are we going to convert this to bond equivalent, to convert this single payment yield to bond equivalent yield? So the formula is, again, interest, and then BE to denote bond equivalent is equals to interest SP for single payment multiplied by 365 to 360. Okay? So, mamaya, we'll apply it in the problem, no, para mas ma-appreciate natin. Now, in single payment yields, tandaan class, like in negotiable CDs and federal funds, sabi nga natin, this is only payable at maturity. So, single payment lang. Therefore, upon maturity, there's a chance for you to reinvest it. So, yung example natin kanina, sabihin natin na negotiable CDs will mature in 60 days. So, sabihin natin na ang issuance date mo is May. So, May and June. So, by June 30, it will mature. So, mako-collect mo na yun. Then, you have the opportunity to reinvest it again to another marketable securities. So, therefore, we can now, kasi nga, meron kang opportunity to reinvest it, no, upon maturity. So, therefore, we can now derive how to convert this interest rate naman into effective annual returns. Kasi nga, ito na yung may element na ng compounding. So, ano yung rate naman kung meron ng compounding? So, meaning, dahil nga nire-reinvest mo, ano nga yun yung compounded interest rate? No? So, basically, your effective annual return, no? Or effective annual rate. So this will be your formula. Kung naalala nyo, ito yung nire-raise natin. No? So raise to the power of. So yeah, be familiar with your calculator again. But later on, I'll teach you the step-by-step procedure, no? So to come up with this. So at least kung hindi kaya ng kung ang meron ka lang is basic calculator, you can still compute for this. Okay. So bond equivalent yields is the quoted nominal or stated yield on a security over a period of 1 year. So compare discount securities to bonds with bond equivalent yields. Anyway, ito na yung pinag-usapan natin yung formula kanina. And also, this is your effective annual returns. Okay. So basically, class, in order for you to calculate bond equivalent yields, at least for, while we're still just discussing money markets, you have to calculate first your discount yield or your single payment yield. From there, you can now derive your bond equivalent yields, and from bond equivalent yields, you can derive your effective annual returns or EAR. Okay? Sige. Let's apply it using discussion problem 1. So a 1 million investment in 90-day commercial paper has a 2% discount yield. An equivalent size and risk 90-day certificate of deposit has a 2% single payment yield. Now, the requirement is which security offers the better return? So, pinag-uusapan natin dito is interest rate. Ha? So, sige, apply natin sa problem number 1. So, given two securities, yung una is a commercial paper, pangalawa is a certificate of deposit. Basically, sa number 1, i-evaluate mo natin yung question, in problem 1, we're being asked, saan mas okay tayong mag-invest? Is it in option 1? Option 1 is a 1 million investment in 90-day commercial paper with 2% discount yield? Or doon sa pangalawa, on a certificate of deposit, which has a 2% single payment yield. So, kanina na-discuss natin that ito yung magiging formula natin for discount yields. And then, ito naman yung formula natin for single payment yield. Unahin mo natin si discount yield. And then, after that, let's convert it to bond equivalent yield. No? So, para matakal na rin natin yung conversion to bond equivalent yield. Okay? So, sana malaki yung screen, no? So, nakikita niyo naman. Ayan. Kaya natin mas malaki pa. Sige. Isa-isayin natin ano ba yung given. So, what's the PF or the face value? Obviously, that's the 1 million. No? So, same naman yung amount na pinag-uusapan natin dito. No? There's just different formula in calculating the interest rate. So, your PF or your face value, that's 1 million. And then the purchase price of the security. Ito siguro pag-usapan natin paano ba i-compute yung purchase price. Meaning, ito yung yung pag sinabi kasi nating purchase price, this is the amount you pay, no? To get the investment. No? So you have face value of 1 million. Sabi discount rate is 2%. And the terms is 90 over 360 term, no? So, di ba, 90-day commercial paper. So, I use 360 no, in this case. Okay. So, I calculated the discount. Paano yun? So, 1 million multiplied by 2% multiplied by 90 over 360. So, that's 5,000. That's the discount. And last time na pag-usapan natin na discount is actually, is it gain or loss on the part of the investor? Anyone? Sige para mas mabilis siguro i-analyze. Imagine yung face value ng instrument is 1 million, but then you're given a discount of 5,000. So instead of paying 1 million, ang binabayad mo lang is 995. So in the standpoint of the investor, discount is actually a gain, no? Kasi nga naman, imbis na 1 million yung ibabayad mo, ang binabayad mo lang is 995,000. So, paano na-compute yung 995,000? So, simply, 1 million less 5,000. So, that's 995,000. Okay? So, I hope nakakasunod pa, ha? Nagawa natin step by step para madaling intindihin. Okay? So, next, so, meron na tayong PF, 1 million. Meron na rin tayong P0, P sub 0. So basically your purchase price. Meron na rin tayo. So that's 995,000. Kunin lang natin itong next part ng equation. So that's 360 over N, which is 90 days. So 300 over 90. Okay? So kumpletuhin na ngayon natin yung buong formula. So PF, so that's 1 million minus 995,000 divided by PF ulit, so that's 1 million. Multiply by 360 over 90. So the answer is 2%. So that's your discount yield or your interest percentage. No? Oops. Now, kanina napag-usapan natin na we need to compare that with the bond equivalent yield. So, computein muna natin yung bond equivalent yield. No? So, here's the formula. Sabi, meron na tayong IB. No? So, that's a discount yield. Paano natin ngayon mako-compute yung bond equivalent yield, no? So that's 1 million. Ganun pa rin. Itong gamitin natin, PF minus P0 over P0. Tapos check natin, okay? So PF 1 million minus 995,000 over 995,000 multiplied by 365 over N. Okay, so that 365 over N is 90, no? So 365 over 90. So meron na tayong yung dalawang equation natin na buo na. So multiply the 2, ayun. So that's equivalent to 2.0380%. Okay, so kaya ang tip ko palagi, class, whenever you're, say, reviewing or practicing to solve problems, so like ito, kung gusto mong ulitin yung pag-solve, ang technique dito is you write the formula again and again. Kasi during undergrad, ang natutunan ko is when you write something pala on your notes, no, 20% of what you write, yun na yung napupunta sa isip mo. So imagine sinusulat mo pa lang, hindi ka pa nagme-memorize, sinusulat mo pa lang, 20% is already being retained in your mind. So 80% na lang yung review na gagawin mo. So unlike kung wala kang sinusulat, 100% yung kailangan mong balikan. So well, it's just a tip. So it worked for me. So try nyo na lang. Anyway, so the answer to, well, the discount yield is 2% and the bond equivalent yield is 2.0380%. 38%. Okay? Ngayon, pag-usapan natin yung second option. Second option is on a certificate of deposit. So, pag certificate of deposit, lisin ko muna ito, hindi natin kailangan gawin. Pag certificate of deposit, ito yung formula. Single payment, yeah. So, PF minus P0 over P0. So, same yung given natin. Actually, mali ito. Same ang given natin. So, therefore, it will give us the same result. No? Kasi kung napansin mo, class, lipat ka lang dito. No? Kung napansin mo, yung formula naman ng single payment at saka discount yield is the same. So, therefore, we can then conclude na same yung makukompute natin interest single payment. So that's equivalent to 2%. Pero notice that to convert that, alisin ko na ito ha. Notice that to convert that to a band equivalent yield, doon nagkakaroon ng difference. So, ang formula natin to convert single payment yield to a band equivalent yield is interest single payment multiplied by 365 over 360. So there are two parts, no? Unahin natin yung 365 over 360. So that's equivalent to 1.01389. So again, yung interest, single payment, so that's 2%. Yun naman. Again, yung 2%, hindi ko na nire-calculate because it will be the same calculation doon sa discount yields natin. Okay? So, same lang yung formula, kaya hindi natin nire-calculate. No? So, that's 2% multiplied by 1.01389. So, that's 2.0278. Kung napansin nyo, class, ang tanong sa atin, which security offers better return? If we focus on discount yield and single payment yield, we can calculate 2% parehas. No? So imagine, kino-compare mo parehas na rate. So hindi tayo makapag-decide. So what's the next step? The next step is to convert it to band equivalent yield. So, kung meron na tayong band equivalent yield, for commercial paper, it's 2.038. And for certificate of deposits, so that's 2.0278. Between the two, saan ba mas okay? Is it on the commercial paper at 2.038? Or sa certificate of deposit at 2.0278. Siyempre, dun ka sa, ikaw, part of the investor to di ba? So, dun ka sa mas malaki. So, therefore, the answer is to invest in 90-day commercial paper. The reason being is that it has a higher return of 2.038%. So, I hope nakakasunod, class. Kung hindi, like I said, during my presentation, hindi ko nakikita yung chat box. So, whenever you're typing there, hindi ko nakikita yun. Later ko pa makikita yun. So, feel free to ask. Okay? Sige. So, ang kinompare natin is band equivalent. Hindi yung discount yield, hindi yung single payment yield. So, therefore, kung parehas pala yung data ng dalawang instrument, whether commercial paper or certificate of deposit, it will give us the same rate, no? The same discount yield or single payment yield. Nagkakaroon ng difference in the bond equivalent yield. So therefore, if we're being asked to compare two marketable securities or instruments, we need to calculate the bond equivalent yield. Okay? Sige. So that's discussion problem 1. I've already uploaded this naman sa Canva, so anytime you can visit the calculation, especially if you want to review for the midterms or the quiz. Okay? Sige. Pag-usapan naman natin on discussion problem number 2, yung effective annual return. So remember kanina, pinag-usapan natin, meron kang discount yield, then meron kang single payment yield. You need to convert it to bond equivalent yield. And then this time, let's convert it to effective annual return. Kailan naman ginagamit ang effective annual return? Ito yung sinabi ko rin kanina na remember, these are short-term instruments, so meaning it matures it matures in less than a year. So therefore, you have the ability or you have the opportunity to reinvest it, no? So ito na nga yung may element na tayo ng compounding. So that's the reason why we need to calculate effective annual return. But again, yung palagi kong sinasabi kanina, in order for us to get the effective annual return, we need to calculate first the bond equivalent return. So, bali meron kang procedure. Number 1 is to calculate for the discount yield or single payment yield. So that's 1, ha? And then number 2, convert it to bond equivalent yield. And then from bond equivalent yield, you can calculate the effective annual return. Sige. I-try natin itong discussion problem number 2. Isa-isa natin. Okay? So, sige. Ayan, medyo colorful na. Pero pag-uusapan natin yan. So 5 million investment in 120-day commercial paper has 2% discount yield. An equivalent size and risk 120-day certificate of deposit has a 2 single payment yield. So basically, the same dalawang instruments, same na 5 million, then 2% discount. We're being asked to calculate the effective annual return. Ganito na lang muna siguro. No? Kayo na lang muna yung mag-compute nung discount yield. Takpan ko yung sagot natin. Para lang practice pa kung parehas tayo ng mga makukuhang discount yield. Sige. Tapos, tawag ako sa inyo ng isa or dalawa. Mabilis lang yan, ha? Sige. Anyone? Ito pala, may experience ako before. Hindi sa class ko sa TIP, but in my class in PUP. Nagkaroon lang ako ng survey. Sabi niya, sabi ng estudyante, syempre hindi natin pagpapangalanan. Sabi ng isang estudyante doon, pag daw nagtatawag na ako, kasi nga online class yun, ang ginagawa niya, nag-exit siya. Kasi kinakabahan pag tinatawag. Ito class pag during mga discussion na ganito, walang tama o mali. Kasi ang tama o mali doon sa quiz dahil yun is after my discussion na. But during my presentation or during our class, walang tama o mali. Kung mali ka, i-guide natin para tumama. No? Kasi nagko-compare nga lang tayo eh. Ganon din sa assignment. No? Wala rin, paano ba? Sa assignment, di ba? Gaya ng usapan natin. Basta lang mag-submit ka a day before the deadline. So, kasi kung a day before the deadline, isasoli ko pa rin sa'yo yun para kung may mali, i-check mo. Usually, ang comment ko lang naman dun is revisit the recording or kaya ang comment ko dun is dandahanin mo yung pagbasa ng requirement kasi baka may nami-miss out ka. Like yung recent na assignment natin, may mga comment din ako doon. No? So, ganun. Kaya hindi mo na kailangan mag-exit pa sa conference. No? Kung mga simple lang naman na ganito. Anyway, hindi ako titingin sa conference. Pero sana may mag-volunteer. Ano yung nakuha niyong discount yields? So, ako na lang ulit. Ang dami natin, ha?
2% po, sir.
2%. Si Rian yan, ha? Tama ba, Rian?
Yes po.
2%. So, natin. Okay, good. So, 2%. So, isa-isa natin, ha? Very good, Rian. How much is the face value? So, it's given. That's 5 million. The purchase price, ganun ulit, let's calculate for the purchase price. So, meron kang 5 million na face value. You have the discount rate. And the terms, that's 120 over 360. And then, of course, you calculate the discount and then deduct it from the face value. So, that's 4,966,000. So, that's your purchase price. So, let's apply it to your formula. So that's 5 million minus 4.97 million over 5 million multiplied by 360 over n. Again, your n is the number of days to maturity. So isa-isain lang natin. So that's equivalent to 0.01 and then 3 multiply the 2. So that's 2%. So that's your discount yield. Again, this will be similar to your single payment yield. No? Now, let's convert it to band equivalent. No? So, sa band equivalent, again, the formula is the same dito sa part na to. So, that's 0.01 multiplied by 365 over 120. So 365 divided by 120 is 0.01 multiplied by 3.041667. So that's 2.04.14. So this is your band equivalent. Pero hindi pa yan tinatanong class. We are being asked to calculate for the effective annual return. So dito na tayo sa third step. Ito na yung medyo colorful. This is your formula to compute for the effective annual return. Sige, isa-isayin natin. Paano ba yung pag-compute ng effective annual return? Una, this is your, kaya ko siya may color coding para mas mabilis intindihin, no? Para pag nag-review ka, alam mo kung saan kinuha. Itong 2.0414, this is actually yung dilaw doon. So this is your equivalent, your band equivalent yield. So that's 0.414%. So yan na yan. Kaya nakadilaw. Next is yung naka-blue. Una kong ginawa is yung 365 over n. So that's 365 over 120. 120, muli pa to. 120. Okay. Okay, susundan pa ha. 365 over n. Next, yung purple naman daw. Yung purple is itong dalawa. So, that's 2.0414. Yun na. Yung dilaw doon, tsaka itong nasa ilalim na 365 over n. So, kinuha ko lang yung, dinivide ko yung dalawa. So, ito na yung result. No? 0.0067. Pwede bang i-limit na lang natin to 4 decimal places? Tapos convert natin to percentage. Okay. So next step, yung pink. So yung pink, combine, yung pink naman is 1 plus yung result nung purple. No? So that's 1 plus 0.00671. So yun yung pink. Next is itong nasa taas. So yung race, no? So yan yung sabi ko sa inyo, check nyo kung paano yung function nung, kasi kung scientific calculator yung gamit mo, madali lang. So in Excel, ayun, kailangan mo lang gagamitan mo yung raise to the power of 365 over n. Pero di ba, alam ko na itong 365 over n. Remember, that's the blue. So 1.00671 raised to the power of 365 over n, or 3.04167. So ang result nun is 1.02055. And finally, ayun, minus 1. So 1.02055 minus 1. So that's 2.0554%. So this is now your effective annual return. So again, itong effective annual return is under the assumption na we are reinvesting the money after it matures, no? So kaya nga nag-invest ka, and then after maturity, ini-reinvest mo na ulit. So this is effectively, this is the rate of return, no, that you get through compounding. Okay? So yan yan lang naman yung reason kung bakit ganyan siya ka-colorful. And like I said, pwede kang gumawa ng paraan kung paano mapapabilis pa. No? So this is just a guide. No? So, kasi meron ka namang formula. In fact, kung yung scientific calculator mo, pwede mong ma-derive tong formula ng diretso. So, itatype mo lang yan dun sa scientific calculator mo, then you can get the same result. So, ito lang sinasabi ko na pag step by step yung gusto mo. Okay. Anyway, meron pa tayong isa pang sample para at least ma-practice mo kung paano na to. Let's now do the second. No? Ito, kunin ko nito para meron tapos. Single payment. Again, hindi natin pag-usapan yung single payment yield. No? It will be the same. No? So 2%. So okay na tayo dyan. And then if we compute now the bond equivalent yield, so that's 2% multiplied by 365 over 360, or 2.0278%. Ngayon, pag-practicean nyo, computein yung effective annual return. Sige nga, kayo muna.
Sir,
Yes, yes po.
question lang po.
Hmm.
Magkapareho po ba talaga yung discount yield and single payment yield?
Hmm.
Kasi po yung sa formula, yung denominator po, purchase price, yung sa single payment po, tapos yung discount yield is face value.
Tignan nga natin. Ito. Ano, sige. Subukan natin i-calculate, no? Kung parehas yung makukuha natin. Good catch. Sige nga, tignan nga natin. Where's the single? Ito na lang siguro yung gamitin natin, no? So, single payment sabi, PF. So, dito na lang ako magsulat, ha? PF minus P0 divided by P0. So that's formula number 1. P60 divided by 120 times may konting difference pala, no? So 2.013. Ayun. So tama ka, iba nga yung denominator nung sa single payment. So in that case, kailangan pa lang natin i-solve pa yung single payment yield. Sino yun? Bilis ng mata.
Martinez po, sir.
Martinez. Thank you. So this is now your single payment yield. So thank you, Ms. Martinez. Okay na ba tayo dito? So dahil na bago yung single payment calculation natin dito, so therefore, ito na ngayon yung bago na bond equivalent yield natin. So pag-usapan ngayon natin yung calculation ng effective annual return. Okay? So saan ko ito nakuha? So yan. So yung dilaw, doon muna tayo sa first portion. Your bond equivalent yield. So that's 2.0414%. So okay tayo dyan. Next, 365 over 120. And then followed by, ayun na yung dalawa, 2.0414 divided by 3.04. Ulit natin. Hanggang 4 decimal places ang gamitin natin. And then ito, convert ko to day. Yeah. Sana parehas tayo na compute, no? And then yung pink. So that's 1 plus 0.0671. Ayun na. And then next is yun ng raised to the power of 3.04167. And then finally, minus 1. So your effective annual rate of return is 2.0554%. Paras ba tayo? Ikaw, si Miss Martinez. Tama ba? Yan din ba nakuha mo?
Di pa po ako tapos mag-compute.
Ay, sige. Sige, try nyo muna. Ayan. Sige, while tinatry nyo, no? Share ko lang sa PUP. Sa PUP, ang ginagawa namin is instead of the instructor giving midterms and final exams, centralize yun, no? So, meron lahat ng representative from PUP Main, tsaka yung mga branches. Basically, contribute kami ng questionnaires. So, multiple choice questions. And then, isang exam yon na at, simultaneously, lahat ng PUP campuses nationwide will take it. So, right now, yung financial management class ko sa PUP, they're doing their midterm exams. No? Natapos kahapon yung strategic cost management. Ang passing grade ko lang is 57%. I'm not sure kung happy ba ako doon o hindi. Pero ang sabi ng director namin, it's a good result daw. So I don't know. Masaya na ba yung 57%? Hindi pa eh. Anyway, so yun, no? So that's 2.0554%. And take note yung kinol yung attention natin ni Miss Martinez, which is very good. So that's a correction. Yung formula natin sa single price yield is actually different to the discount yields, no? Kaya ayun, naka-highlight. In-highlight ko na nga, hindi ko pa nakita. No? So that's, there's a difference in the formula. So take note of that. So again, thank you, Ms. Martinez, for correcting it or for highlighting it. Okay? So next, let's talk about the money market instruments. No? So in money market instruments, actually, na-define na natin ito isa-isa last time, pero let's do it again. So we have treasury bills, federal funds, repurchase agreements or repos, and then siguro later on, we'll just use RP. Commercial paper, ginamit na natin yung CP, negotiable certificates of deposit, or CD, bank acceptances, ito yung pinag-usapan natin ng mga bank guarantees kanina, so BA. Isa-isayin natin ngayon. So treasury bills or T-bills are short-term debt obligations issued by the government. T-bills are virtually default risk-free and are highly liquid and have little interest rate risk. Well, the reason being is that these are being issued by the government, and like I said, government can never be bankrupt, kasi nga it has a lot of source, taxes. BSP through Bureau of Treasury buys and sells treasury bills to implement monetary policy. Pag-usapan natin tong monetary policies na to. So, in buying treasury bills, get yung class na. Okay, sorry. So, in buying treasury bills, we're actually implementing, or the BSP is implementing expansionary monetary policy. Ano bang ibig sabihin pag expansionary monetary policy? So, meaning it's just managing monetary policy by taking actions to affect the economy of the country. So, paano yun? It can be by decreasing discount rates, or purchasing government securities, or reducing yung reserves ratio natin. Yan, kung napapansin mo, kung nanonood ka sa news, ito yung palagi natin naririnig, no? So, kung napapansin mo sino ba yung BSP governor natin? Si Jokno. He would always say na ito yung forecast natin, and then we're looking into reducing our reserves. So meaning we're looking into doing expansionary monetary policy. Now, in selling treasury bills, it's actually the opposite one. It's contractionary monetary policy. So meaning it's there's a reduction in government spending. So particularly deficit spending or reduction in the rate of monetary expansion by the central bank. So that's the only difference. Now, like I said earlier, similar to capital market, we also have secondary market for treasury bills. No, but in money market, like I said, these are highly negotiable instruments, tapos bearer instruments. So meaning, kung sino may hawak, he can always trade it. No, so the secondary market for treasury bills is the largest of any money market instrument. So the primary dealers make a market in treasury bills by buying the majority sold at auction and by creating an active secondary market. So paano ba to? 'Di ba, ini-issue siya ni government, no? In fact, hindi mo naman siya pwedeng basta bilhin kay government. It goes through channels and usually through commercial banks, no? Yung very recent, siguro few months ago lang, they offered it through RCBC. Now, it's also in denomination, no? So if I remember it right, 5,000 yung lowest, no? So 5, 10, 20. I think 20,000 yung highest denomination. So now, dahil nga, di ba, sabi natin, highly liquid tong mga treasury bills na to. And walang risk, no? Paano nga nagkakaroon ng active secondary market? So also, treasury bills, we consider this under money market in such a way that it matures within or less than a year. Nagkakaroon ng secondary market if we buy it in auction. So meaning, ikaw yung nagpa-purchase sa government and then in return, you sell it or you trade it at siguro higher price, no? So another example is when you want it to be liquidated ahead of the maturity date. So that's also an active secondary market. So primary dealers trade for themselves and for customers. So yan naman yung example natin. T-bill purchases and sales are book-entry transactions conducted over wire transfer. Yun na nga, dahil nga it goes through different channels like commercial banks. And T-bills are sold on a discount basis. So meaning, if the face value is 5,000, it's being sold below the face value. Okay. So now let's discuss T-bills prices. So T-bill prices can be calculated from quotes by using the following formula, or by rearranging the bond equivalent yield equation. Let's apply it to discussion problem number 3. May 16, 2021, this is the issuance date. Treasury bill, bid, and ask are representative over the counter quotations as of 3 p.m., quoted as a discount to face value. Treasury bill yields are to maturity and based on the ask quote. Using the table for the T-bill rates, what is the ask discount yield on the treasury bill that has a face value of 10,000 pesos that will mature on April 27, 2022? Sige. Pag-usapan natin yan. Using problem 2. So meron tayong ano bang tinatawag dito? What is the ask discount yield on the treasury bill? Basically, yung tinatawag dito is yung purchase price natin plus yung P0, no? Yung purchase price of the security, or in this case, purchase price of the treasury bill. Ano ngayon tong ask at saka yung ask yield? So pag ask, this is your treasury bill rate, ayun yung ask. And then itong treasury bill or yung bond equivalent, that's the ask yield. Okay? O sige. Let's apply it to problem number 3. So using the table for the treasury bill rates, what is the price on the treasury bill that has a face value of 10,000 that will mature on April 27, 2022? So ito yung given, no? Tapos binigay na yung maturity sa'yo. Ngayon, ano yung titigan natin? Yun lang, isa. Yung April 27, 2022. So dito tayo mag-focus. Sakit sa mata niya. Yan. Saka pa yun sa mata, pero okay na yun. Sige. Isa-isay natin using the formula. Una, PF. So given naman yan, 10,000. PF is your face value. Next, treasury bill. Ito daw yung as. So that's 0.513%. Excuse me. And then yung N over 360 mo, so that's 346. Paano natin na-compute yung class? Paano ako nag-arrive dun sa 346 days? So sabi, the issuance date was May 16, 2021. Pero kailan magmamature? April 27, 2022. So dahil calendar year, kinuha ko 365 days. So 365 days, una kong dineduct is yung May 16 kasi hindi ka naabutin ng May 16 di ba? So, that's why 365 minus 16 and then 349 minus 3 dahil nga April 27. So, meron ka 28, 29, 30. Diba? April 30. So, that's 346. So, from May 16, 2021 to April 27, 2022. So, that's 346 days. Kaya na tayo nag-arrive dun sa 346 over 360. Okay? So, ayun na. Kinocompute natin to. Inisa-isa lang muna natin yung given. So, after that, we multiply the 3. So, that's 10,000 times 0.513%. Ayan, given naman. Multiply by, ito na yung 346 over 360. So that's 49.305. Ngayon, yung next equation is 10,000, ito na tayo, PF, minus yung buong equation na nasa parenthesis. So that's 49.305. So your price is 9,950.70. Okay? So that's answer to question 1. Ngayon, calculate lang natin yung bond equivalent yield equation naman. Parang pinoprove lang natin class na it will give us almost the same values. No? Kasi di ba remember kanina, pinag-usapan natin either discount yield or single payment yield, kinonvert natin to bond equivalent yield. No? So this time, given yung discount, yung as rate or ito yung interest rate, then binigay din sa atin yung bond equivalent rate or return. And then it just proved na the same yung purchase price natin. No? It's almost the same. So 9,950.70. Ito naman is 9,950.76. I-calculate natin yung bond equivalent yield. No? So we have the face value of 10,000. And then, isa-isa ko lang ulit na. And 346 over 365. Ito naman yun. Next is, multiply yung dalawa. So, 0.522. Ayun na yun ha. Saan nakuha yung 0.522? So, that's the as yield or the bond equivalent yield. And then, next is 1 plus, ito na, yung sa ilalim, 1.004. Limit lang natin sa 4 decimal places. And then finally, 10,000, yun na, divided by the whole equation, yung denominator. So that's 1.004948. So that's 9,950.76. Okay? Kaya ang sinasabi ko, class, procedural to, no? So dapat alam mo talaga yung formula. Okay. So that's treasury bills. Oops. Now, federal funds, obviously this is only applicable to the US, but then for the sake of discussion, let's just go through this. So federal funds rate is a target rate in the conduct of monetary policy. So Fed fund transactions are short-term, mostly overnight unsecured loans. Banks with excess, banks with excess reserves lend federal funds, while banks with deficient reserves borrow federal funds. Ito yung pinag-uusapan natin na in terms of reserves, no? Kasi yung banks class, banks in general, actually yung standing nila is based on their reserve, no? So how much money is being kept in the bank. Multi-million peso loans may be arranged in a matter of minutes. The reason being is it's a transaction between banks. Federal funds are single payment loans and thus use single payment deals. I think that's the important part. No? So whenever you're encountered federal funds problem, so you need to use single payment yields formula to calculate. Okay. Now let's discuss repurchase agreement. Repurchase agreement or repo or RP. Repo is repossession. No? Is the sale of a security with an agreement to buy the security back at a set price in the future. So basically, it's just an agreement. No? So I sell you this security, but I can repurchase it, or I can buy it back at a price in the future. So repos are short-term collateralized loans. So typical collateral is Philippine Treasury securities. So funds may be transferred over wire transfer system. It has a haircut applied on a collateral pledge. One-day maturity repos are called overnight repos, and repos with longer maturities are called term repos. No, so basically, in nga class, repurchase agreement. It's simply an agreement between two parties, no? So that they can repurchase it at the in the future, no? At a set price. No? So what's the reverse repurchase agreement? So it is the lender's position in the repurchase agreement. This occurs when the lender entered into an agreement with the borrower to buy again government securities pledged under the repurchase agreement in the future. It's just the same. Now, let's discuss repurchase agreement yield. So ito ulit yung rate pa rin pinag-usapan natin. The yield on the repurchase agreement uses 360-day year, like the discount rate, but uses current price in the denominator, like the bond equivalent yield. Kung napapansin mo, pinaiikot-ikot niya lang yung formula, no? It's one the same. No? Sige. I think we have a problem on this. So that's discussion problem 4. So let's apply that. Konting tiyaga pa, medyo mahaba yung discussion natin today. Pero later naman pagdating sa mortgage, wala na masyadong calculation, more on siguro yung more on discussion of what mortgage market is. Okay. So a depositor enters a repurchase agreement with RCBC. It agrees to buy government securities held by the bank at a price of 14,995,000 with a promise to buy them back at a price of 15 million. Compute the yield on the repurchase agreement with the maturity of 5 days. Okay. So your face value, the face value is 15 million. less 14,990. I just dropped the 30 no, para mabilis. Divided by the repurchase, the selling price or the P0. So that's 14,995. Next formula is 360 over 5 days. N is the maturity of 5 days. So the answer is 2. Multiply the 2. So that's 2.401%. Okay. So that's how to compute your repurchase agreement or repo. Okay, sige. Let's discuss the other money market instruments. No? Next, we have the commercial paper. Commercial paper is unsecured short-term corporate debt issued to raise short-term funds. So, example, if we need working capital. So generally sold in large denominations, so 100,000 to 1 million, with maturities between one day and 270 days. Kaya ano pa rin siya, no? Part pa rin siya ng current assets natin. Kasi it matures with less than 1 year. So CP is usually sold to investors indirectly through brokers and dealers. And CP is usually held by investors until maturity and has no active secondary market. Yields are quoted on the discount basis like the T-bills. Again, if you encounter problem on commercial paper, ang formula na gagamitin natin to compute the rate is the discount yield. No? So like the treasury bills. Okay. Ito naman na ipag-usapan natin kanina. If it's a certificate of deposit, definitely you'll use the single payment yield. No? So negotiable certificate of deposit or CD is a bank-issued fixed maturity interest-bearing time deposit that specifies the interest rate and the maturity rate and the maturity date. CDs are bearer instruments and thus are saleable in the secondary market. So pag bearer instrument, meaning kung sino yung may hawak, siya yung owner. And then therefore, it's always saleable. So denominations range from 100,000 to 10 million, 1 million being the most common, often purchased by money market mutual funds with pools of funds from individual investors. Yun naman yung cash pooling na tinatawag natin. So again, if it's a certificate of deposit, we'll use single payment yield. Okay? Now, to compute for the bond equivalent yield on the negotiable certificate of deposits, we have this formula. No? So actually, you just multiply it by 365 over 360. And again, NCDY, this is your yield on NCD. And again, paano nga yung pag-compute natin ng yield on NCD? It's using the single payment yield. So, parang minary niya lang using NCD na in the formula, but it's the same. And then to compute for the maturity value of the NCD, we have face value of the NCD plus 1 plus R rate or the yield quoted on, meaning this is your nominal rate, multiplied by number of days from the issue date until maturity. Okay. Finally, we have I think this is the last one. Okay. Finally, we have the banker's acceptance. So again, banker's acceptance is the time draft payable to a seller of goods with payment guaranteed by a bank. It is used in international trade transactions to finance trade in goods that have yet to be shipped from a foreign exporter or seller to a domestic importer or buyer. Foreign exporters prefer that banks act as a payment guarantors before sending goods to importers. No? Ito yung sinasabi ko na bank guarantees. So paano nga siya yung nangyayari? Dahil nga ginagaranty na ng bank, nagiging mas mabilis yung transaction between exporter and importer. No? So it's usually international trade transaction. So meaning, sabihin natin na Filipino ka, meron kang katransact sa China. China talaga yung nasa isip ko. So meron kang Chinese na nakatransact nga, no? So meron kang business dealings with the Chinese. No? Instead of paying them cash, mas gusto ni Chinese na meron ka na ng banker's acceptance. Kasi nga, yun is already guaranteed by the bank. Meaning, kahit wala pang money na involved, just by giving the banker's acceptance, it's already guaranteed as cash. No? It's good as cash. Kasi nga, guaranteed by the bank, and syempre si bank naman will not guarantee it kung wala talagang amount deposited or kung walang credit line si Filipino businessman, no? With the bank. Okay? Sige. So, who are the money market participants? So, napag-usapan natin, Bureau of Treasury, the BSP, of course, the commercial banks, brokers and dealers, money market mutual funds, corporations and other financial institutions, and individuals. So basically, even individuals can enter the money market. No? Now, just for the sake of discussion, let's discuss international money markets. No? A euro dollar is a US dollar deposit outside the jurisdiction of Federal Reserve. So meaning outside the United States. No? Euro dollar investments may be traded in any country other than United States. Of course, in United States kasi, it's the federal funds or Federal Reserves. Now, how are we going to compute for the rates for a euro dollar? We are using the London Interbank Offered Rate or LIBOR rate. Ngayon, itong LIBOR rate, usually maririnig niyo yan sa mga investment. Whenever, say, we're investing internationally, and at this rate, we're just comparing it with the LIBOR rate. Or LIBOR is the London Interbank Offered Rate. Euro-dollar certificate of deposits are US dollar-denominated CDs held in foreign banks. Okay. Let's go now to mortgage markets. Konti lang to. Pagtsagaan niyo ako, ha? So, mortgage markets, meron kasing kakaiba yun. Malinaw naman yung dating ko sa inyo, Rian.
Yes po.
Sige, thank you. Mortgage market. What are mortgages? So mortgages are long-term loans secured by real estate. An amortized loan whereby a fixed payment pays both principal and interest each month. I think halos lahat siguro familiar na sa mortgage. No? So basically, kung bumili ka ng bahay, so this is your loan. No? Ito yung loan that you negotiate either with the bank or mismo sa developer. So in my case, I have a unit with DMCI. Meron akong loan with the bank kasi mas mababa ang bank compared with in-house financing. Tapos meron pa isang option is through Pag-ibig. Pero kung i-calculate mo, mas mababa pa rin yung interest rate with the bank compared with Pag-ibig. Siguro ang easier lang to approve with Pag-ibig kasi Pag-ibig is, alam mo na, automatically it will be deducted sa kung halimbawa employed ka sa salary mo. Kaya hindi ganon ka-tedious mag-apply ng loan. Usually, tine-check lang yung capacity mo to pay by checking yung kung magkano yung salary mo, take-home pay mo in a month at against dun sa amount na gusto mong i-loan. No? So, that's how pag-ibig works. No? How pag-ibig checks. Pag-ibig plus, yung agency, hindi yung love. Ha? So, huwag malilito. Nasa mortgage tayo. Ha? So, pag-ibig housing, yung pag-ibig housing loan. Ha? Okay. Sige, saan pa tayo mapunta? Characteristics of the residential mortgage. So mortgage can be roughly classified along the following three dimensions. So we have mortgage interest rates, loan terms, and mortgage loan amortization. So mortgage interest rates, the stated rate on a mortgage loan is determined by three rates. So we have market rates, term or long-term mortgages have higher rates. Siyempre, mas mahaba yung time ng mortgage, mas mataas yung rates. Bakit? Sige nga, anyone. Walang tama, walang mali. Pag usap lang tayo. Actually, parang review to nung determinants of interest rates na pinag-usapan natin dati. So remember, kon lang ulit dahil nga mas mahaba yung mortgage, so pinapasok mo dyan yung element of default, no? Default risk. So therefore, kaya mas mataas din yung rates na ini-impose natin. Discount points. So lower rates negotiated for cash upfront. So syempre, dahil nga you're paying in cash, they're offering you discount. Kasi nga naman, cash upfront na yan. Kaya nga kung napapansin mo, ewan ko ba, madalas sa Instagram lang or sa Facebook, mukhang kung ano yung sinesearch mo, usually sa Google, yun yung lumalabas na mga ads, either sa YouTube, or sa Instagram, or sa Facebook. So, may yan ewan ko ba, kayo na-experience yun na ba yan? Try nyo lang mag-search ng kung ano sa Google. Yun agad yung makikita mo na ina-advertise kung saan kang website pumunta. May naka-experience lang ba yun o ako lang yan?
Ganun, sir. Minsan sa ibang social media accounts, parang connected.
Oo nga ano pa nga meron lang akong tinry na nag-check lang ako sa Shopee. Siyempre, 6.6 Ano mo naman tayo dyan. May tinry ako yung product na hinahanap sa Shopee. Yun na yung nag-advertise sa Instagram. So, ganun siya katalino. Alam niyo na agad ko ano yung hinahanap mo. Pag nag-search ka lang sa isang app. Anyway, si Rian lagi yung kausap ko. Yung iba hindi nagsasalita. So, sayang naman yung mic. At saka sayang yung time. Anyway, loan terms. So, mortgage loan contracts contain many legal terms that need to be understood, mostly to protect the lender from financial loss. So collateral, usually the real estate being financed. So like in my case, meron akong unit niya with DMCI. So I entered into mortgage loan with the bank. Ang collateral is the unit itself. Nako, yun nga, no? So ang sinasabi nila, this is the best time to invest daw in real estate kasi nga bagsak yung mga interest rates. No? Which is true naman. Pero just the same, you have to be mindful siguro of the loan terms kasi nga there are a number of charges imposed by the bank. No? Kala mo 3 million. So 3 million, yun yung niloloan mo with the bank. But along with that, ang dami mga bank charges, no? So, yun yung naka-surprise sa akin during the time na during the time na pumasok na ako ng mortgage with the bank, no? So, I wasn't expecting to pay the bank with so many bank charges. So, kala ko, di ba? Imagine, nangungutang ka na nga sa kanila. Sina-charge ka ba ng bank charges? So, parang double whammy. Kasi nga, yung inutang mo, magbabayad ka na ng interest with them, but at the same time, they are charging you bank fees pa, no? Just by entering into mortgage agreement with them. So, yun, watch out, no? Especially in your case. Sooner or later, papasok na kayo sa mga ganyan mga investment. So down payment, well, a portion of purchase price paid by the borrower. So another consideration in mortgage is that you need to, uh, I mean, yung loan terms will require you to pay at least 20% of the total price, no? Kaya kung bumibili ka ng bahay or ng condo, ito based on experience, no? Kung pre-selling siya, meaning binubuo pa lang, nagbabayad ka na, and usually it's 20% no down payment. Only 80% will be covered by the mortgage loan. 80% lang yung i-cover ni bangko or ni in-house financing. Okay? Mortgage loan contracts contain many legal terms. So, yun pa rin yan. Tapos insurance, ito na. Insurance against default by the borrower. So, covered yan. Ang tawag natin yan sa Philippine setting, it's mortgage redemption insurance. So, in my case, instead of paying mortgage redemption insurance, it's yearly, ha? So imagine, nangutang ka na, may collateral na, at the same time, meron pang mortgage redemption insurance na binabayaran. That's on top of everything. In my case, instead of paying the bank outright, ang ginawa ko is yung unit, yung bank, nilagay ko as beneficiary ko doon sa existing insurance ko. So therefore, hindi na ako nagbabayad sa kanila ng MRI. Instead of paying them MRI, parang binago ko yung insurance policies ko to put them as my beneficiary. No? So that's one way to work on the MRI. No? Instead of, imagine sabihin na natin 20,000, depende yan kasi sa value ng loan, no? But yearly you have to pay MRI. Instead of paying them outright, so expense ko na yun, pinasok ko siya sa insurance. So at least by paying insurance, yung insurance, it's life insurance, and at the same time it has investment portion pa. So it's a win-win. No? It's just a tip, no, on how to go about with these mortgages. No? So qualifications, ito na, includes credit history, employment history, of course, to determine the borrower's ability to repay the mortgage as specified in the contract. Very important, class, as early as now, to make sure that you have good credit standing. The reason being is that these banks, they have a network. So like, kung blacklist ka sa isang bank, it turns out that you're blacklisted with all these network banks. No? So kung blacklisted ka sa BPI, there's really no chance for you to secure a loan with BDO or Metrobank or these big commercial banks. No? So because of the network. No? So meron din silang ganun. No? So, kaya be mindful of your finances, no? Especially that, syempre, sooner or later nga, you'll go into these investments, no? You'll invest in real estate. Syempre, that's capital investment, no? If you have money, well and good, but if you don't, you need to enter into bank loans, at pinaka-importante na you have good credit standing, meaning bayad mo lahat ng bills mo on time, bayad lahat ng credit cards mo, no? Maayos kang customer, tapos syempre you have employment history, no? Good background, no? So that's also important, kasi syempre ang sinisecure nila dyan is they're really reviewing, validating that you have the capacity to pay. Okay, so lenders will also order a credit report from one of the credit reporting agencies. Yun na yun, pinag-uusapan natin kanina. These banks, they have a network or third-party agency that really checks on the credit standing. Payment history, debt yun nga, even credit card applications can affect your credit score. Mortgage loans are amortized loans. No? So this means that a fixed level payment will pay interest due plus a portion of principal each month. It is designed so that the balance on the mortgage will be zero when the last payment is made. So tama yan. At ito pang isa pang sigurong tip. Since mortgage loans are collateralized loan, make sure that you go to different banks and go to a bank which will offer you the lowest interest. So ganun lang pala. Insured. So types of mortgage loan. So insured versus conventional mortgages. If the down payment is less than 20%, insurance is usually required. In fact, it's always required. No? At least in the Philippine setup. No? Fixed rate mortgages, the interest rate is fixed for the life of the mortgage. This is not entirely true. Probably in US, I'm not sure, but in the Philippine setup, the fixed rate usually it's for 3 years lang. And then after 3 years, depending on the market, kaya kanina, di ba, it's market driven. So depending on the economy, it may increase or decrease. Actually, it can never decrease dun sa stated or initial fixed rate mo, no, for 3 years. No? It can go up, but sabi nila, it can never go down. So yun yung makikita ko. No? So that this is already application, no? So not just theoretical base. No? Ito siguro yung yung bullet number 3. This is mostly applicable here in the Philippines. No? So adjustable rate mortgages. The interest rate can fluctuate within certain parameters. So it's fixed within 3 years. After 3 years, we need to renegotiate again. The thing is, if say for example, magre-renegotiate ka with the bank after 3 years, and then turned out na hindi ka happy dun sa rate, and then you wish to move it to another bank, katakot-takot na bank charges na naman. So, I mean, that's a decision to make. No? Most mortgages are immediately sold to another investor by the originator. This frees cash to originate another loan and generate additional fee income. Still, someone has to collect the monthly payments and keep records. This is known as loan servicing, and servicers usually keep a portion of the payments received to cover their costs. So basically, class, loan servicing is just outsourcing the collection. No? In all, there are 3 distinct elements in mortgage loans. Originator packages the loan for an investor. Investor holds the loan. Servicing agent handles the paperwork. So that's why this is being outsourced. Now, what is securitization of mortgages? Securitization of mortgages developed because of problems dealing with single mortgages, risk of either default or prepayment and servicing. Pools of mortgages eliminated part of this problem through diversification. Now, when we say securitization, it is just simply saying a conversion of an asset into marketable securities. So class, meaning securitization of mortgages. Mortgages are now being used as marketable securities. So pwede na rin siya na-transfer. Now, the mortgage-backed security was created. Ito na nga yung securitization. Pools including hundreds of mortgages were gathered, and the rights to the cash flows generated by the mortgages were sold as separate securities. Yun na nga yung mortgage-backed security. At first, simple pass-through securities were designed. Now, what are the benefits of securitization? So it reduces the problems caused by regional lending institutions' sensitivity to local economic fluctuations. Borrowers have access to a national capital market. Investors have low risk and long-term investments in mortgages without having to service the loan. So mortgage pass-through, it's a security that has the borrower's mortgage payment pass through the trustee before being disbursed to the investors. This design did eliminate some risks, but investors still face prepayment risks. Actually, that's the last slide. No? So, as you can see, class, in mortgage market, sabi natin, walang it's really a relationship between the borrower and the bank or in-house institution. No, it's always backed with a collateral, which is the real estate itself. I think that's really to sum it up, and it's really important to have a good credit standing in order for you to negotiate for a better rate, no? Kasi imagine if wala kang good credit standing and here comes the turnover of the unit. So sabi mo na pre-selling. So pre-sell, nagbayad ka ng 5 years. After 5 years, natapos na ma-develop. Nakatayo na si building o nakatayo na si bahay. Ngayon, dahil kailangan mo nang pumasok sa loan, kailangan mo nang bayaran yung buong amount do sa developer. Dahil wala kang magandang credit standing, kung sino na mag-offer sa'yo ng kung gaano kataas na rate, dun wala kang room to negotiate. No? So, kaya ang tip is make sure, of course, hindi ka naman papasok sa investment na ganito kung hindi ka sigurado. Kasi, like I said, this is a collateralized loan. No? So, kung hindi mo mababayaran to, the bank can always go after your properties. Plus, kaya nga yung isa pang tip ko kanina is use your existing insurance, either life insurance policies to cover the mortgage redemption loan. So, anong ibig sabihin nun? So, in case something happened to you, meron kang meron kang life insurance that can cover the mortgage, no, in full, or depending do sa face value ng life insurance mo. Kaya ang tip ko, instead of paying mortgage redemption insurance outright, try to pay or try to get another life insurance to cover the full amount of your real estate. So kung halimbawa 3 million yung real estate mo, make sure na meron kang 3 million worth of life insurance para hindi ka nagbabayad ng outright expense. So imagine, kung nagbabayad ka ng 25,000 pesos a year, kung nilagay mo lang sa insurance yung insurance is depending, syempre, alam mo naman yung theory behind life insurance din, di ba? So, ayun, at least that's how I manage MRI.
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!